Hello and welcome to Startup Street. I'm Shruti Mishra and with me are Arundhati Ramanan and Ritu Singh. These are the top headlines from the startup space. Government releases a draft of the revised data protection bill 3 months after withdrawing the previous bill. The new bill is solely focused on personal data. Data localization rules see some relaxation. Penalties capped at 500 crore rupees. Government reserves the right to exempt entities from the laws in case of national security and public order.
A giant leap for India's startup community. ISRO launches India's first ever private rocket developed by Skyroot Aerospace, which is a 4-year-old company.
Twitter temporarily closes its offices to staff after a new wave of resignations hit the company. This comes after Elon Musk issued an ultimatum asking staff to commit to a hardcore work environment. Elon Musk keeps tweeting through all the drama, even posting memes mocking the expected demise of the platform.
Indonesia's biggest tech firm, GoTo, is laying off 1,300 workers, or 12% of its workforce, as per Reuters. The SoftBank-backed company has attributed challenging global macroeconomic conditions behind the retrenchment.
WhatsApp and Messenger would drive the company's next wave of sales growth. Meta CEO Zuckerberg tells staff this as he seeks to assuage concerns about Meta's finances after its first mass layoffs. The CEO claims that business messaging is probably going to be the next major pillar of Meta's business as they monetize WhatsApp and Messenger more.
China grants Tencent its first license for a video game in 18 months, ending a dry spell that threatened its position as the world's top game maker. China's gaming regulator has approved 70 new titles in November. Beijing moved against the country's gaming sector last year as part of a sprawling crackdown on big tech companies.
Well, those are the headlines we are tracking for you this evening. Online bootcamp for digital skilling, Simplilearn, has raised $45 million in its Series E funding. The round was led by GSV Ventures, a multi-stage venture capital firm. CLAL Insurance and Disruptad, AdQ's venture platform, also participated in this round. And to talk to us about the road ahead at Simplilearn and the future of the edtech sector, joining me now is the founder and CEO, Krishna Kumar. Krishna, welcome back to Startup Street. Tell me, what is the current valuation of the company and what are the fund allocation plans, especially around, if there are any new offerings on the pipeline and any new markets that you're eyeing?
First of all, Shruti, thank you for having me on your show. It's always a pleasure. So we raised this funding at 60% premium over the last round that we had done with Blackstone. So in a year when most of the tech stocks are down, startups are also going through like a down round. I think this is a significant achievement from Simplilearn team that this round is 60% up from the last round that we had done, and the overall valuation is upwards of $500 million.
Okay, so upwards of $500 million. And any new offerings? And if you could talk to us about your expansion plans.
Yeah, so Shruti, our business is helping people get into digital, and digital as a area is a very, very fast changing area. So to make sure that we keep pace with all the changes that are happening around us, we continuously launch new programs because there are new things happening in the market. So launching new program is an ongoing phenomena. But what we are going to do with this new fundraise, we are going to just do what we are doing, do better. So we have a very strong presence in India and US, and we are going to only strengthen our presence in the US market. So right now we have about less than 20 employees in the US market, but we think that very soon will be like this number will grow at least 10x.
Okay, Krishna, what is the road to profitability looking like? If you could talk to me about your revenue growth targets as well.
Yeah, so Shruti, we are looking at doing 1,000 crore in the current financial year.
Okay.
And Simplilearn was traditionally a profitable company. So before the Blackstone transaction, we have been running this business profitably. Last year and this year, we did a lot of growth experiments. We had access to capital to fast track our growth. And I think a lot of those experiments have done great, provided great results for us. But now we are at a stage when we are going back to profitability again. So for Simplilearn, next year will be a profitable year for sure.
All right, that's good to hear, Krishna. But, like you said, you've witnessed a growth of over 60% in the past year. You've added more than 120,000 paid B2C learners and over 1 lakh enterprise learners on the platform. Of course, in addition to the over 2 million free learners that you add to your Skill Up platform every year. How have you been able to achieve all this? What has made this possible?
So Shruti, internally we call this mindful growth. So as long as you build the right product that is adding value to your learners, they will come back and subscribe to your platform. So that's what we have used as a mantra, that not do anything artificial, not spend a lot of money on creating on advertisement. And at that point of time, you might have a lot of learners, but the moment you cut your advertising budget, you are down to like
Yes.
a very different level. So we never followed that strategy. Instead, what we did that we provided a lot of free learning to people. Once they engage with what we offer for free, and if they like the experience, they come and get migrated to our paid platform. So we have this offering called Simplilearn Skill Up, where anyone can come and get learn anything that they want that Simplilearn has to offer. The difference between our free and paid model is that in free model, we provide you the curriculum and you learn on your own. Whereas in a paid model, you get mentored by an expert. So that's the major difference between free and paid. So a lot of people, when they like the free, they come for our mentored cohort-based learning, what we call, where you learn from an expert, and that's our paid platform.
Okay. Krishna, I'm going back to something that you mentioned earlier in the interview, that this funding has come at a time when the industry is going through turmoil. We've seen a wave of layoffs and a lot of pain in the edtech sector. What do you make of the current volatility in the space?
So I think, Shruti, I just wanted to tell you a little bit about history. We started in 2010. There was no edtech sector at that point of time. And that time, it was a very mission-driven approach.
Yes.
We wanted professionals to be better at their work so that they can grow in their career, lead a better life, right? So since the mission-driven approach, we have focused a lot on delivering real value. But what happens when the sector goes through a hype? A lot of players get into the sector thinking that it's an easy money and everybody can build business, so am I. Those are the companies who are facing a lot of heat. Companies who suddenly grew at a rapid pace because they had access to a lot of capital, they were not really focused on are they adding real value to the customer? So I think those are the companies that are fundamentally strong. So when the markets are tough, that's the place where would differentiates fundamentally strong company from the weak companies.
All right, absolutely. One final question, Krishna, before I let you go. Simplilearn claims to offer access to world-class work-ready training to individuals and businesses around the world. Going forward, how do you plan to design and deliver your boot camps? What new trends do you see emerging, and what's there to stay?
Yeah. So Shruti, our aspiration is to be the largest digital skilling player in the world. And for that, we work with, we partner with a lot of credible universities in India as well as in US, a lot of leading tech companies to co-create programs that our learners can get benefited from. So what we are going to do is just try to become better every day. I think that has been our mantra, that how can tomorrow be better than yesterday? And continuously work on incremental improvement that helps us achieve our goal.
All right, Krishna, we wish you the very best of luck for all your goals. And it's always a pleasure talking to you. Many thanks for joining us today.
Shruti, thanks for having me. Bye-bye.
And from one fundraise to another, shared electric mobility startup Yulu has raised $9 million earlier last week through debt financing from U.S. International Development Finance Corporation. Now, the USDFC is the United States government's development financial institution and has proposed the investment in Yulu through its new e-mobility financing team. Now, this comes just 2 months after Yulu raised $82 million from Canada's Magna and existing investors, including Bajaj Auto, in September. Now, to chat about Yulu's latest fundraising and how it plans to use these funds to expand operations, we have with us Anuj Tiwari, the CFO of Yulu, and my colleague Ritu Singh. Anuj, thank you so much for joining us on Startup Street today. Now, this is your second fundraise in just 2 months. With this $9 million debt financing, tell us why you choose the debt route now, and also how do you plan to deploy this capital?
Thanks, Anuditi and Ritu. Thanks for having me. So, yeah, we are thrilled, actually. It is, again, successive, what I should say, validation of our business model, our vision and mission by top institutions, globally top institutions. And this also gives us great sense of responsibility. This is now time to deliver and act on the plan, which we have promised. This is actually, this fund which we are looking, including the one which we raised last with Magna, is mostly will go into the R&D and the CapEx and fleet size increase across the 6 to 7 cities in India for the next 1 year. And to answer your second question,
why like you said, it is time to deliver?
Yeah, it is time to deliver. We have been actually, we have been actually very, very capital sensitive company. We have been very fund sensitive and very disciplined company. And now is the time to just scale, deliver on our promises. Yeah.
Okay, Anuj, let's talk about some of those promises. For instance, Yulu is not profitable yet, right? You posted about 50 crores of losses in the last financial year. Where do you stand now, and when do you expect to be EBITDA positive now that you raise these funds as well? Investors do have those expectations.
Certainly, Ritu. So yes, we did post it, but if you see, we grew almost 100% from the last year, while we managed to control our cost. Actually, what you see the losses is basically the capacity creation. This year, when we scale up, we will be EBITDA positive this financial year itself on the monthly run rate basis, and during some time next year, we will be PAT positive also.
All right. So EBITDA positive this financial year as well, and PAT positive next financial year.
Yeah.
Also, talking about your scaling up plans, you plan to put about 100,000 bikes on the street. What's your current strength, and by when do you expect to meet this target that you set for yourself?
So today we have 10,000 bikes on the street, mostly in the three cities, that is Bangalore, Mumbai, and Delhi. By next year, almost mid of next calendar year, we should be deploying 100,000 on the street. Yeah.
Oh. No, Anuj, what we really saw from Yulu is you pivoting towards the gig workers during the pandemic, and your share of the business currently, if you could tell us how much of it still comes from there versus from personal mobility users, and how will this mix evolve in the medium to long run, because you do make more revenue from the gig workers versus the personal users.
So this is an interesting, actually, see, we discovered we did not pivot it actually. It was another segment we added to our revenue mix. We saw during the pandemic side, when actually the goods mobility got an impetus, that people were using more and more our bikes. And it was not just because of the situation. It was because of the economics. Deliveries in, if you're doing on the EV in our bike, was 30-35% cheaper than the ICE-based form factor. So what we did, we have now launched a product which is meant for the delivery, goods delivery, light goods delivery. Today, almost 60 to 70% of our fleet is getting used in the delivery segment. But in the long term, we will like to maintain it at 50-50 mix, around 50-50 mix. Yeah.
All right. So delivery right now is at about 60 to 70%, and you want to sort of move to a 50-50 thing. Now, let's talk about your partnerships. You have a partnership with Bajaj for manufacturing, and now you also have one with Magna. Are you in talks with any other potential partners? Are you also looking for partnerships to get bikes on a lease basis?
So we have some preliminary or early discussions, I would say, but it is too early to comment on that. But definitely this is on our future funding plan, as we move towards more asset-light model. Yes.
Okay, so that'll be interesting to see, lease partnerships from Yulu. But Anuj, before we let you go, you've recently announced about 1,200 crores of investment in Karnataka during you've signed an MOU where you're going to be putting more bikes on the road, charging and swapping infrastructure in the next 5 years. Will this come out of the capital that you've raised? And tell us how you propose to go about this.
So this is actually a part of this will be deployed this year. But during next 3 to 4 years, we are looking to deploy almost 1 million bike. And on our broad plan, we will deploy almost 100,000 plus bikes in Bangalore. So a part of this 1,200 crores will come from these bikes, as well as we are looking to deploy battery swapping stations. For the next year, a big chunk will come into Karnataka, especially in Bangalore city. So this together will constitute almost, in our plans, 1,200 crores in next 3 to 4 years.
Anuj, thank you very much for speaking with us here. It's been a pleasure. Thank you.
Thank you so much for having me.
All right. We'll move on to the latest on the Twitter front then. The New York Times has reported that after the 5 p.m. Thursday deadline was given by Elon Musk to employees to choose whether to quit or stay on at Twitter and commit to long hours at high intensity, hundreds of Twitter employees have appeared to decide that they will depart with 3 months of severance pay. Twitter also announced through an email that it would close its office buildings and disable employee badges until Monday and stop access to that. The hashtag RIP Twitter has also been trending on the platform following these mass resignations. Now, in his quintessential style, Elon Musk also responded with a meme of his own, sort of mocking these tweets that have been coming on about the resignations. Remember, this comes after Musk laid off nearly half of the 7,500-strong workforce And after this takeover, there are reports that suggest that about 2,900 employees are still remaining, and that was before the mass resignations began. On Thursday evening, the version of the Twitter app, which is used by employees, also began slowing down, according to a Reuters report. And reports of Twitter outages rose sharply from less than 50 to about 350 reports on Thursday evening, according to the website Down Detector, which tracks websites and app outages.
All right, on that note, it's time for us to head into a short break. But coming up on the show, Cisco and Wilgrow recently launched an initiative to support the growth of women-led startups in the climate tech space. A special conversation with Wilgrow CEO Janan Lilani on the occasion of Women's Entrepreneurship Day. Stay tuned for more.
Welcome back. You're still with us on Startup Street. Now, November 19th is celebrated every year as Women's Entrepreneurship Day. And to mark this occasion today, we put the spotlight on social enterprise incubator Wilgrow and tech major Cisco India, who recently launched an initiative to support the growth of women-led startups in the climate tech space. My colleague Aishwarya Anand caught up with Wilgrow COO Janani Lilani Bhargava and began by asking her about the key challenges faced by women entrepreneurs in the green tech space and how the new initiative will help them deal with the same. Take a look.
Today, the climate action space is really upcoming, and we see a lot of attention, monetary resources being channeled towards it. At the same time, there's also growing evidence which suggests that the more number of women that participate in climate action initiatives, the better the outcomes, right? But as you very rightly said, when it comes to innovation and entrepreneurship, the number of women that are actually representing this space is far fewer than we'd like. So this initiative, run by Cisco and Wilgrow, is looking at picking some very high potential women-led solutions in climate action and really helping them gain a strong market presence in India so that we're able to accelerate not just the presence and participation of women in climate action, but also the outcomes that we're seeing.
Absolutely. So increasing the output of their contribution in this space. Now, you've already started looking at applications for new applications, correct? So could you take us through what's going to be the eligibility criteria and how many such women-led startups will be incubated into the program?
Absolutely. We're looking at having 5 women-led solutions that we will be working very closely with. And this is only over the next 1 year, right? It's a subject that Wilgrow is going to be working on and has a strategic approach for the next 5 years. But when it comes to eligibility criteria, so the first one is the ability of the enterprise and the founding team to actually create exponential social and environmental impact. As a social enterprise incubator, that's table stakes for us. And the second is, the composition of the founding team. We also look for the business model and to see how viable is it, how is the product market fit, in the ecosystem. Is it something that will actually be able to scale and grow?
If I could just add one thing, will these just be the growth stage startups, or will you also be looking at the startups that are already in their Series A, Series B round? Which stage are you looking at?
We're looking at solutions that are ready for market. So okay. From what you described, we're looking at fairly earlier stage companies, because one of the challenges we've seen that women entrepreneurs face is that they're unable to gain access to markets. They're unable to gain access to the first set of strong customers that will help them really grow. So that's where we want to play. Early revenue, or even companies whose solutions are just about ready to enter market, that's the space that we're looking for.
All right. Now, this program will be rolled out in February 2023. So can you tell us which fields of climate tech will you be looking into?
We're looking at a very broad range, Aishwarya. We're also using this as an opportunity to understand where are women-led solutions really playing, right, in this landscape. So while we know that there are a fewer number of women-led solutions, we want to know where is that predominant. But to give you some examples of the type of solutions that we're looking forward to, one category would be in the area of waste, right, and being able to convert waste into economic value. The second would be in clean energy. The third, where we have a lot of experience, would also be in making water-efficient technologies in agriculture. And the fourth, we would say, is in using clean energy solutions to be able to generate more livelihoods.
take us through what kind of financial and mentorship support Cisco and Wilgrow will deploy through this accelerator program?
So we're looking at up to 20 lakhs for each of the enterprises that we work with. And that money is meant to support the organization in taking their go-to-market strategies ahead. From our experience, what we've learned is women entrepreneurs say that, look, today there are a lot of different awards and different types of recognition programs that are going on. But when it comes to getting a foot in the door, when it comes to actually meeting with decision makers, that's where support is really lacking. So that's where we really want to play a very, very strong role and see that customer acquisition through till the end.
It's Friday and it's time to take stock of how the startup space fared in terms of new deals. 23 deals took place this week, valued at over $300 million. Some notable deals include CRM SaaS maker Content Stack, which bagged $80 million from Insight Venture Partners, Illuminate Ventures and others. Fintech SaaS firm Lentra AI raised $60 million from the likes of Bessemer Venture Partners and City Ventures. Simplilearn got $45 million from GSV Ventures, ADQ and others.
Lenskart raised $40 million from Chirite Ventures, Axis PE and DSP India Fund and digital solutions provider for diabetics. Beto got $33 million from Lightrock India, HealthQuad, Flipkart as well as others. Now overall, the startup world has seen 1,039 deals this year so far, valued at over $22.5 million.
That's all the action on the startup deal front. But with that, it is a wrap on this edition of Startup Street. More news and updates continue on the other side. Stay tuned.